Welcome to Ask the Accountant, the podcast that is made for you. Weekly podcast live Mondays from 8:30 a.m., released on the podcast service of your choice on Wednesdays. Your main weekly hosts, Aaron, Patrick, and Johann. Got something to ask? Submit your questions below or ask during the show. Podcast loading. We are currently getting everything set up behind the scenes, so sit back, relax, and we will be with you in a few seconds. Enjoy.
Welcome to Ask the Expert, everybody. I did it. I've been promised ourselves not to say that. No, sorry. Ask the Accountant. It's not that we've stolen this from any other content on the internet whatsoever. Today is the 7th of November, episode number 5. And my name is Aaron Patrick. And with me, as always, is my co-host, Johann. Now, you can get your hand out your face out your hand, should I say, at that point. How are you feeling today?
I mean, you might be looking for a co-host because I don't like bounties, but I'm looking for one that can get the title right. I mean, I don't ask for much. Yeah, no, I am
this week, hasn't it?
I am good, thank you, Aaron. Just to pre-warn our audience, you're not late. We're just early. So, Aaron's got a dentist appointment, so we had to come on early today to fit it all in.
Yeah, we wanted to make sure each and every one of you had your full allocation of content. We didn't want to cut it down for you. Today we've got a cracker of a show plan. We're going to be talking a bit MTD as always, but we might as well bring that in. And then there should be, or there's possibility of some sort of a tax hike. So we thought we'll have a conversation around that one. Remember, this podcast is all about you, and there's lots and lots of opportunity for you to give us some reviews, including the opportunity to drop us some feedback. And I'm about to put that into the comment section of our live post now. But yeah, no, last couple of, or last week, I said, everyone love it. How was the feedback from everyone?
Lots of good feedback. I think we certainly got a few people thinking with our MTD VAT registration discussion. Resulted in Michelle doing a fantastic little TikTok video. And we've had some feedback, which we will update the audience with on that specific topic shortly. But turns out we weren't wrong, but we weren't right at the same time.
Exactly. We did have some nice constructive criticism as well, saying that nice save at 21:20. So someone decided to leave the podcast a bit early last week and then go back again. So it was nice to see that we didn't go unnoticed, so we were able to save the video from there. A separate video on extra business and client support during lockdown hyperinflation with experience will be interesting from your perspective. That's a great little bit of feedback, and we're going to add that to a future show. Also on just so we got people understanding who's watching via the live and can see the video content, we've got a little extra person or extra view of the show today. As you can see here, we've got Cactus Cam. So we're just going to keep an eye on our brand new cactus and just making sure it's okay. That just need a bit of water. Is everything all right with it? We're going to give the opportunity to just keep it out. So throughout the show, just going to add it to the thing, just to let people know, keep understanding exactly how it's going. Put the merch out there a little bit as coming soon. You might be able to get a cactus near you. What do you think to that? Yeah, and a bit of a new cactus. What do you think to it?
Who doesn't want to sit and watch a cactus grow?
I mean, there's an opportunity for a 24-hour stream if there's enough people out there. So you guys just let us know in the comments below. Put it on the feedback form, or drop us a review on iTunes, and then we can make sure that we keep everyone up to date with what's happening in the world of cactuses. Okay, let's get to the main topics then. So topic number 1, MTD. There seems to be a potential that the momentum for deferring MTD seems to be getting even more talk out there. And in particular, in this case, it seems to be the MTD, so Making Tax Digital, ITSA, for the tax return, the one that's coming in about a year and a half's time, around that sort of time. Or it's even less now where you keep thinking about time's flying by. But it was the opportunity, or there is rumors going around that the landlord side of things, which in my eyes was probably one of the most important aspects of MTD itself, was trying to capture the landlord regime. But there's an opportunity, or there's potential, there's talk that they're going to be deferring the landlord side of things. What do you think to that? Do you think that's going to be something that is likely going to happen based on all the bits we've seen, or the rumors we've seen, or the kind of controversy, I suppose, we've seen in terms of what MTD has been implemented so far?
I mean, if we put, they're not just potentially deferring the landlord bit for the sake of it. It is a very complex scenario where we have got people with multiple streams of income, which we know MTD can't really handle at this moment in time, etc., going on. If they did defer it, people like Hammock would see a major setback to their plans, their roadmap for growth and investment, etc., I would imagine. So that'd be interesting to see how that would impact on them. It would certainly change our plans slightly, because we had plans ready for 2023, but then the whole thing got pushed back a year. So yeah, it's for a lot of people, I think there'll be a sigh of relief, or I told you so going on. For the more proactive of us, I think there'll be a, oh, for God's sake, not again. So yeah, I mean, there's talk of the 10,000 threshold being raised to 20,000 as well. And there's talk of deferring the whole thing. Ultimately, this project is expected to cost £1.2 billion. And when you are going through an economic crisis, a £1.2 billion project can only stay viable for so long. At some point, it risks being deferred to the future so they can save the money in the short run. So yeah, I wasn't expecting MTD to be spoken about in regards to deferment and stuff a couple of months ago. I was expecting it to carry on, but the amount of talk about it now, I think Rebecca Cave from Accounting Web has said she's expecting a statement of some sort, if not during the mini budget, in the autumn statement, but on the Friday afterwards to tell us what's going on. So yeah, next week's going to be all ears to see what's happening, and we're certainly going to have to do quite a lot of dynamic rethinking of our plans and business plan for the future if it's going to be delayed again.
Yeah, because if you think about it, like from a risk point of view, or the ability for people just to kind of just tag on MTD itself in terms of the whole idea that we're going to take our standard way of doing accounts and make it digitalized, then for your sole traders, and it will come into play later, your partnerships and everything else, for the vast majority of them, yes, it's going to be a culture shock. Yes, it's going to be a wake-up call, but they're kind of already doing some form of bookkeeping, most of them, or at least doing a set of accounts, majority of them. So actually for them to then have to digitalize that was, a big step, but it would be kind of a step up for most of them. Whereas when you think about the landlord side of things, majority of them, you're lucky if they even keep records. They're very much a case of the money comes in, they get a statement, their job done for them. And it comes the 29th of January when they go, oh, I've got a tax return to do. Let's quickly put one together. And unfortunately, that's majority of the kind of landlord way of doing it, especially, that term accidental landlords, where, they've been inherited a property, or, they've just taken one on, or it's their second home because they've moved from one house to another. Those sort of scenarios where they're not really got that intention of a business mindset of doing bookkeeping and keeping on top of it and everything else. So you can definitely see why they would be the more risky subset of people, and they're the ones that's going to kind of be the ones that are going to cause the biggest challenge. So it's a shame though, isn't it? Because I think, like you said, from an opportunity point of view for people like Hammock and everything like that, just having that time that everyone's got to go in and it's all going to be at the same time would make things easier. Now there's going to be this kind of crossover, and it's going to be, well, do you fall under MTD ITSA again, and do you not? It's going to be the VAT debacle again, where there was that whole threshold and everything else. So it will probably make things more confusing. It's probably going to make things more difficult. But the fact that every time we were asking questions to HMRC during, these times that we've had that chance to talk to them for the software vendors and everything else, where they've been on stage or they've had webinars or whatever, there's always been questions they've had to go away and go, oh, we haven't quite thought of that yet, or we haven't got an answer for that yet. And I suppose that was the warning signs, wasn't it?
Yeah. Yeah, I mean, I get it's complicated. I mean, I was just chatting to a landlord the other day, and they felt they were quite educated in the field, and they'd read up on it all, but they'd read up on it and got confused. So they were like, "Well, I've only got to go MTD registered if I do £10,000." Now their thought of that was profit, which is like, no, it's just turnover. To which they were, well, once you take out the agent, once you look at the money that's actually coming into our bank accounts, that's not an issue, because we only get £9,000 a year deposited into our bank account. So that's after your agent fees and all of the maintenance fees and stuff. You've got to go to the top of that invoice line. What rent are you charging? £1,200 a month. Right. Well, there you go. You're over the threshold. So even someone that's read up on it has misinterpreted the information, because let's face it, it is complex and complicated and worded in a very horrible way, as everything is from HMRC to cover themselves and give themselves their own loopholes. But yeah, it's to then throw more thresholds and more information and changing information when someone's already started to get a picture of what it looks like. That is really challenging for them to do.
Yeah, because it felt black and white originally, didn't it? It was, oh, do you do a self-assessment tax return? Well, you look forward to doing an MTD ITSA going forward. And then suddenly, as we read further and further and further down, there's all these different aspects and when people come in and when people don't. And yeah, it's just going to get more and more complicated as we go along. But I don't know what we expected, anything different, really, to be honest, with the world of MTD. And speaking of the world of MTD, do you remember back when it was VAT was all we talked about with making tax digital? Well, we got some feedback last week about VAT and MTD registration, because rightly or wrongly, we've been saying how it's a little bit confusing for clients, how they go and register for VAT, and then they have to do a separate registration for MTD. So it's like, well, why not do that all at the same time? Well, they do have the opportunity, and I do remember using this actually. There is a new portal for getting yourself registered with MTD and VAT at the same time, just treating it all as one big VAT registration that'll do it all. But the problem is, when I used it a while back, it was completely broken, so never revisited since. And I don't know about you, Johann, but I have heard nothing about this. There's been nothing from HMRC. No, when you go to register for that, why not try using this solution? No, point me in this direction or anything else. So, yeah, some great feedback that came in. And apologies, I forgot to write down who it was that feedback, but I'll have a look at that in a moment.
It didn't have a name on it.
Oh, it didn't have a name. Oh, that's brilliant.
No.
But if a small business registers for that in MTD ready, but not if an agent registered using the normal agent portal. Have you used this yet? Have you come across? I suppose it's the fact it's not agent ready yet.
No
issues.
This is the problem. Is my team, as many accounting firms have, we've got a workflow, we've got a process. Client comes to us and says they want to register for VAT, or we identify a client needs to register for VAT. We have that meeting. And then we go through our usual process of best practices. Every accountant should have their own agent portal. You should never give your accountant your own login details. But we go into our agent portal and we register a client using that for VAT. But that's not MTD ready. So if we want to register them, so the person that fed this back has actually sent us the link to the MTD agent update, which explains all this going forward from the 1st of August. So if we want to register someone for VAT and MTD at the same time, we need to follow a new system, which I've just put out this morning to my team. But again, it's just, why is it an afterthought? And why are we making it? All right, we need to make it easy for business owners because they only do it, but they only do it once. What about the agents that are doing this monthly, weekly in some cases? We need to be able to register clients onto the right tools at the right time. We don't want to overcomplicate things for our clients. So yeah, we are going to follow this new system and see how it goes. My understanding from social media groups is it is buggy as anything, and completely broken at times. So we'll see what happens.
Yeah, and I think it's like, again, we're pushing this new system, and we should be thinking, long-term wise. And again, that question about helping agents and everything. So why do we all still have to go through the debacle of let's set someone up and then do a 64.8? Why, and for anyone listening, 64.8 is when us agents then can talk to HMRC on the client's behalf, which is quite an important part of being an agent. So, this whole solution, go for it.
There's an issue with agent authorization as well at the moment that I discovered last week. So we've got agent authorization through the MTD portal for VAT. And because of that, we didn't do it at 648. But it turns out that authorization isn't at a high enough level to discuss debt with HMRC. So we have to go back to the old-fashioned paperwork or send a code out to the client, even though we're already authorized, so that we can discuss the debt side of things with HMRC, because they've not allowed us to have that level of access we need to discuss things with HMRC using their agent registration. And they've never made that clear before, that by registering for agent authorization using the MTD portal, you no longer have access. You won't get the authorization to the level you perhaps need.
Yeah, it's a file only at the moment, isn't it? Which is absolutely ludicrous. Filing a little chat here and there. But also, we've got this fancy new portal that we're forcing our clients to go into, and they get to choose who their agent is. So why not have an option there? How, what level of agents do you want? Because if they are just, quote unquote, this isn't derogative, but if they are just the bookkeeper, then maybe you do want that lower level. It's just a file only. But if if you've got someone who is their accountant or their business advisor, or does much more for them, then maybe you do want to increase them. And even now we've still got that problem where we've got that disconnect between clients who may have a different bookkeeper and accountant. They can't have 264.8s. It's a broken system, and it's been broken for a while. And this was their chance to absolutely fix that and go forward. But yeah, we could hope and pray. My other thing about this whole registration thing that I was hoping for when they started talking about this new way of doing it was, where's the API integration? Let's look forward, give the opportunity for client engager, accounting manager, Sage, QuickBooks, whoever it's going to be, press a button and do the registration directly in the software, get it all flowing through nicely. But again, that's, wishful thinking that doesn't look like it's going to come to fruition at any time soon. And it's, it's a very, let's just put a Band-Aid on it and hope for the best. And it's, that sort of approach is starting to really make it difficult for us as agents and for clients as well. So yes, frustrating, but yeah, I don't know if we expected anything more from them.
To be fair to HMRC, which I don't say very often, but I've spent a bit of time after our discussion the other week about MTD readiness and APIs and pulling into software information and stuff. I spent a bit of time looking at the HMRC MTD APIs and what you can and can't do. And there is some interesting stuff out there. Like, you could, for example, pull through the liabilities due to HMRC for VAT into your client practice management tool. You could pull through dates to verify tasks, etc. So there are some cool things out there that no one's using. But then perhaps if HMRC said, look, these went to a panel of accountants, said, look, these are all the things we can do. What's our priority? We'd have probably told them agent authorization and registration APIs are more important than you telling us what the liability for that client is to our software.
Yeah, and in fairness, I suppose, and we don't say this very often, but this is where QuickBooks is unfortunately letting us down a little bit. Their API connection to MTD is one of the poorest out there. It's as simple as that. Xero, you get a lot more information. Sage, you get a lot more information. I was looking at a solution the other day called Linebooks, and they have what you were talking about there, that whole idea. You can see your liability. That's all coming through, and that is there. And again, that, from a client's point of view, that's brilliant. You log in, you can see everything, if they've done assessments, if there's anything outstanding, whatever it's going to be. And it helps the bookkeeping as well, because if a payment comes into the bank, well, we know exactly what it relates to because there's an API that tells you and it pushes it through. So yeah, I suppose we are kind of, unfortunately, in a disadvantage in the software we've chosen, in fact, that their API isn't, utilizing anywhere near the amount that it should do. So yeah, I suppose that's something that's in more of a software development that we've got to kind of push and kick, and that's what we do. For anyone out there, we are up there trying to bang the drum as much as possible to make sure software developers do kind of bring that in. So yeah, interesting times, but yeah, there's much more we can do with. And you're right, you know, if HMRC are developing API and it doesn't get used, then what's their incentive then to go and put more API in there, because it's just wasted resource, isn't it? Wonderful. Before we move on to our next topic, we've had a bit of feedback live. And while we're doing feedback, it's only right that we just make sure the cactus is okay. Oh, drooping a bit, but that's the camera the camera more than anything else. We'll sort that out in a moment. That's embarrassing, isn't it? But yeah, comments that have come through live. We have Jim Parker says, fortunately, to have a bigger portfolio which has the economies of scale. So talking all about MTD as a landlord. I use Sage for my free companies for MTD, so using Sage to keep himself compliant. And very, very true. HMRC really want landlords to use an agent that will eventually get them to do their return. It definitely seems that that's what they're pushing for. And then Ash working out. So hopefully, you know, this is encouraging him to take that next step, go to that next rep. You know, when you see chiseled people like us doing the podcast like this, it's probably all the encouragement that he needs. So yeah, good luck out there, Ash. Hopefully it's going well for you. Co-host for QuickBooks Labs.
I bet his punching bag's taking an extra punching, thinking about HMRC.
It's probably like, why is everyone talking about this again? Fair enough. Okay, next question, or next point of topic that we want to bring in. Unfortunately, it seems like the rumors that are gathering are true. There will be some form of tax hike, which we were expecting in the next statement to be released. But it looks like the two areas that are going to affect us the most, and the two areas that we're going to bring into discussion, is both capital gain hike and dividend hike. So, I mean, it seems doom and gloom, doesn't it? But it should be at least potentially taxes that don't affect absolutely every single person out there. You know, you have to have some form of capital gain. You know, you have to have to even activate things like capital gain or dividends. You have to have some form of investment at least. But it is also, you know, that continuation of having a small business seems to be something that the current government, the current regime, is looking to make sure gets taxed at a more, they would say, fairer rate. For us, we're going to say is much more of a painful, at least it's going to be a hike there to everyone who's got a small business. Yeah, and you want to kind of give a bit breakdown of what we expect to hear, what we expect to think, and then we can have a chat about what we think that's going to do for our clients and for small businesses out there.
So yeah, so basically, we'll hit the first topic of capital gains. Basically, the government are looking to increase the amount of tax we pay on our gains. They say it's to bring it in line with income tax and stuff like that. The people this is going to hit the most are landlords, in a way. So I feel really sorry for landlords at this moment in time, because most landlords have properties. If they're on mortgages, they're interest-only mortgages, with the idea you pay the capital back when you've sold the property. So at the moment, their interest rates are going through the roof because of the Bank of England interest increases, which means their costs are going up. And in Scotland at the moment, landlords are banned from increasing their rents, and they will be until early next year. So costs are going up. You can't increase your rents to cover that, in Scotland at least. And now if you sell your property after April, you're going to pay more capital gains tax. If I was a landlord, I'd be looking to sell up and get out by April. Now, the problem with doing that is you won't be the only one looking at doing that. So the market starts to become flooded, and it either slows down and you don't get your deal across the line in time, and or the value you want to get out of your property is not as high as it should have been a couple of weeks ago, for example. So yeah, capital gains, it doesn't impact the majority of people. Because most people, when they just sell a house, it's their residential house, they don't pay capital gains on that. That's fine. But those that have got property portfolios and stuff that are struggling to break even at the moment, and they're looking to sell up, they're going to have to sell up before April. I've already had 2 clients say, look, we're looking at this. can you help? And we're all just saying, look, it's all speculation at this moment in time. It's all rumours. We don't know what the percentages are going to be, but let's wait until the 17th of November. But I can imagine on the 18th, 19th, that weekend, I'm going to be a busy boy.
Yeah, without doubt. And you're right. It just seems like one thing after another for private landlords at the moment, doesn't it? It almost felt bad enough that there was that restriction on interest for higher rate earners. That was like a kick in the teeth for them, and straight away kind of eliminated majority of people just even considering it if they're a high rate earner who had that disposable income to put into the rent into market. And then we had this whole 30-day turnaround for capital gains, where suddenly if you're going to sell something, you've got 30 days to let HMRC, or 90 days, whatever the number is. But either way, you've got that opportunity that, or you had another kick in the teeth of, right, there's more compliance they're going to have to go through. There's more bits that they're going to have to look at to be able to. We had MTD ITSA on the horizon, which we've already talked about as being another kick of teeth. And then if this comes to fruition, and they do, there's talk about equalization of the personal allowance to the capital gain allowance, so that you've got one or the other to use. And again, it's all the higher rate tax earners that, yes, I suppose, the cynical of them is, the rich get richer, and let's sort that out. But it is making it so it's difficult for them to invest in the local economy. They're going to be forced to have to invest in whatever, elsewhere, other countries and everything else, because that's the only way that they're going to get any form of incentive from. So what you're doing is just taking that cash, that economy, and you're just throwing it out of the country if you're not careful. Because that's what all our clients are going to ask. Well, we can't do rental anymore because we've been so fingered by it, and it's going to cause that issue. There's also other rumors that it's entrepreneur relief as well that could be at risk, that that's going to be something that's going to be there. And that again, that'll be another kick in the teeth for small business owners and entrepreneurs to go out there and build the economy, because we're going to need those people to get us out of this slump we're in. So yeah, it's going to be a tough time if they are questioning. Like you said, we'll be busy because we're going to have people who are going to have to think long and hard about their investment strategies. And at the end of the day, like you said, they're just going to have to say, right, well, enough's enough, and we're going to have to invest elsewhere, which seems like the wrong thing to do. And it seems like it's just going to cause a knee-jerk reaction, unfortunately.
Yeah, it's capital gains increasing is going to be challenging. And it doesn't, one of the major incentives for people to sell their bookkeeping or accounting firms in our industry, for example, is if they do the deal right, they only pay 10% on the first £1 million of the deal. That's fantastic. But if that's gone, then actually it might be worth just holding off and riding it out, putting a management team in, trying to find a way to back away yourself a bit. So yeah, it's going to be a challenging time ahead if these changes do come through.
Yeah, exactly right. And yeah, it's one of those where, again, it's hitting our clients more than any of the other changes that are out there. And majority of the time, you'd expect these sort of changes to be more for the corporate side, wouldn't you? But alas, that's not going to be the case. And then the other potential hike, again, to clients like ourselves, is there's the rumor of increasing the dividend. Not only from the 8.75% is now, remember there's got that small little incentive or small little uplift anyway because of the NI increase, but that's going up from 8.75 to 10%, which I suppose, and one only silver lining, makes it easier to calculate the tax on there, I suppose, and that's about as useful as that's going to be for us. And then there's the other potential double hit that we could also lose our dividend-free allowance from 2,000 to 1,000. So, and again, it's the same old story. It's exactly the same we've already said. It just seems like it's that attack on owner-managed businesses running as a limited company. What do you think to that, Jan?
Yeah, I mean, this was all kind of coming out in the press late last week. I think there's two jarring positions. As a director of a business, you think, well, I put a lot of risk and time into my business, so do I want to pay myself tax efficiently? Of course. I mean, personally, I take everything through my business as a wage because that makes personal finances easier for me and my wife. But the the public perception of directors is that they only pay 8.75% on dividends, and that's not fair when we pay 20, 21, whatever it is, percent, wherever you are, and whatever salary you're on for the same money. Now, directors will argue, well, we pay corporation tax to be able to get the dividends out. Legally speaking, corporation tax is not a personal tax. It is a tax your business will pay. So, yeah, the public perception of it isn't great, and the government and the media are pandering to that. But at the same time, a lot of these businesses are the ones that didn't get any financial support during COVID. They didn't get furlough. They didn't get anything else for that matter, because they're probably working from home, a lot of them. So there wasn't any business rates relief, etc. So, yeah, there's a lot of different opinion points from all different angles. So yeah, it's going to be interesting to see what happens on the 17th. Like you and I were saying, Aaron, though, does this mean actually, because a lot of people have moved from sole trader to limited companies just because they can avoid MTD for a couple of years that way. Is it actually worth dealing with MTD ITSA for the sake of if your taxes aren't hugely different anymore?
Yeah, exactly. And that is the conversation. Like, one of the things that we love about our job is the fact that we get to take brand new businesses and we get to encourage them and, tell them about their taxes, because they always, obviously, they're coming to us because they're concerned, or they're, scared, or they're worried, or whatever it's going to be in terms of what their tax position is going to be. And, as accountants, we always explain to them that this is the most tax efficient route, but then this is the way that you could do it that's more simplified. And we have those conversations with them, and they're always different. But it just, these changes like this just completely changes the game again. And we're going to have a different conversation with them and different talking. At some point, it just makes it look like we don't know what we're doing, because we're like, we don't have that crystal ball to explain what's going to happen and move things in. It's the U-turn all over again. It's like, we've told them to do one thing, now we're going to tell them to do the other. It does bring up that question, is it worth bringing them to limited company again? We've had so many, like Johann said, about so many that finally made that jump from sole trader to limited company. And so it's like, oh, actually, maybe now wasn't the right time if we are taking away dividend, if we are going to take away the other aspects of it, and it's going to be a lot less beneficial for them going forward. So yeah, it's a shame, but it also affects the people who, their livelihood depends on stocks and shares coming through, and how that's going to be, and those sort of elements. It's going to bring more people into having to do tax returns than they've ever had before, and those sort of aspects of it that's going to have the knock-on effect as well. So yeah, you can kind of understand why there is that, like you said, that perception. There's that gap between a sole trader and limited company. We are bridging that gap even more so than ever before. And you do some calculations, you could even find that being a limited company will be less beneficial now than you would be from being a sole trader or partnership, or whatever the setup's going to be. So that's going to be a conversation topic for each and every individual client, and it's going to be something that we're going to have to deal with and see if this does come to fruition. But yeah, it is what it is. Taxes are taxes. We can't do anything about it. We've just got to find ways in which we can advise our clients as much as possible. So we will see, and we'll keep everyone up to date on that one. Yeah, I mean, proof's going to be in the pudding, isn't it, when it actually gets released? Maybe, or hopefully, or it could even be worse than this. So maybe we'll just got to wait and see what happens, aren't we?
Yeah, it's going to be interesting watching on the 17th of November. I mean, I'll be in the Great British Small Business Show that day, so trying to watch that, and I imagine I'm going to get some questions asked at that event, on that announcement that I won't have had a chance to watch at that point. So yeah, I might have to have a headphone in, listening to BBC News and jotting down some notes while also talking to people. But it's fine, I can multitask like that.
Yeah, it's going to be an interesting time, isn't it, for everyone? And yeah, and for you as well. I mean, having live, that means you've got opportunity for small business to go to talk to you live for your reactions as well. So if ever you need an incentive to go down to there, then you've actually got a true expert to sit there and talk about as he's trying to figure out himself what's actually true and what's not. So yeah, that'll be interesting times. In fact, if anyone's out there with a camera, that'd be great content just to see Jan trying to scuttle his way through. We had some great comments coming through. Ash says deferring MTD would not impact NetTracker really, as we're playing a very long game with the majority of customers US and Canada. But I feel for the larger software companies that would have invested hundreds of thousands to MTC stuff. Ideal scenario would be to make them MTD option for extended period without people get longer to use the idea. Yeah, completely right there, Ash. Definitely agree with the fact that there's a lot of software putting that time and effort in. I mean, the cynical of us would say that, you know, maybe this is why the MTD updates haven't been too forthcoming, because a lot of them are seeing the writing on the wall, and that's why, you know, we've already kind of had these conversations before about the fact that it doesn't seem like there's all that much content or all that much out there. So maybe this is why. Maybe, you know, people have already knew, and it was a case of why put so much effort in when it's going to get delayed anyway. So interesting point. Paul says, if the amount of tax that's the only reason to go limited, then I would question they're even the right person to run a limited company. Exactly right. But at the end of the day, you know, clients want to know what's the most tax efficient way for them, isn't it? And it's our role as accountants to push them down, or at least guide them down whichever route that's going to be. So rightly or wrongly, we tell them that limited company is going to be best for their scenarios. Chaz Tucker, got to run, but we'll watch later. Wanted to show some support for both Aaron and Johann. Getting to grips with QuickBooks using the channel app and receipt capture. They are amazing. You'll absolutely love the QuickBooks app. Hopefully it goes well for you. And a massive thank you for the super sticker. We'll explain later down the line where that's going to go to. We've got some great content coming that we'll put all support towards. So thank you very much. And again, thank you for the support. That's really, really useful. Thank you, Charles. That's brilliant. With that, then I think we might as well move straight on to the question section. Got some great questions coming in. Remember, if you do want to get a question over to us, either can ask us live, as we've got the opportunity to talk it through now, or we've got the opportunity for you to put it into the into our fancy little form where we capture it and we talk about it. So I'm going to put that into the form in a moment, into live. Well, let's go for that first question while I'm trying to multitask and failing miserably. And it is, what are the softwares I should know as an accountant? Johann, do you want to go and answer that one?
Where to start? I mean, QuickBooks, Xero, Sage, Free Agent, they're your four main ones for your bookkeeping, day-to-day stuff. Anything over and above that is going to be specific to whatever firm or practice you're running or working in. They're all going to have their own choices regards tax filing and accounts production, etc. So yeah, it basically just, the best thing I've done is I've subscribed to a lot of different accounting tech YouTube channels. So both the channels owned by the software providers, so I get to hear about updates. They're not all great with their YouTube videos, to be fair, but and then you've got channels like myself and Aaron's, where we will be covering all various topics, and then go and visit accounting shows and stuff where you just see all the providers in one room and you can just work your way around. It's a fantastic way to do it.
Yeah, it certainly is. It's never been a more important time to be on top of that. Excuse me, sort of that stuff. It's we talk about it a lot, don't we? Tech stack. It's one of those kind of quote unquote sexy words at the moment in the accountancy industry. Show us your tech stack, and we'll compare tech stacks and how big's your tech stack. It seems to be something that kind of gets mooted around a lot. But it's so important. Like, there is so much software out there that can do so much good for your clients. And just knowing and at least having awareness of it is so important. Cresco is one I'll go to as like one of those ones where can completely change the way that clients interact with their customers, and just having an awareness of it and knowing what it can do and knowing what it wants to do and being kind of involved in that sort of development side of things for them is so important to helping clients take that next step and pushing them forward. EPOS solutions, like that was one of the most important things that I spent my time looking into, because the amount of clients that just want to have that bit of advice and bit of questions, and I mean, even I've still got grey areas that I'm trying to reach out to vendors to get some opportunities to get some testing on and everything else. And just knowing about those solutions and those softwares can be really, really powerful. And then it's how they interact with you, like QuickBooks and Xero and Sage and Free Agent and Linebooks, and the list just keeps going of what opportunities are out there. So yeah, for me, they're the ones you want to be focused on. Client first, client focus, how you can help your clients, and that will build that relationship with them. You telling them or giving them some examples of what EPOS solutions they can quickly put into their business to get it off the ground and make the huge difference in your long-term relationship with them. So I'm very much keen on, let's get those client focused ones ready. Let's get, maintain on those ones. And then, unfortunately in your early career, you're going to be forced down what accounting solution to use and what practice management solution to use. You won't really get too much of a say in that. But just appreciate why that's been chosen. There must be a reason that they've gone down client engager versus accounting manager, whatever it's going to be, or Iris versus Capium, or whatever the solution's been that's been implemented. And you'll be able to get some really good insights into it. So yeah, it's never been a better time just to wherever you are in your career, just keep knocking on the door, trying to find out exactly what software's out there, because you're going to have that opportunity to really make some difference, in my opinion, which I think was what it's all about, isn't it?
Definitely. Yeah. No, really good.
Wonderful. And then we just have time for what we got, probably one more major question, and then we'll go on to our final question. So let's just bring this one in. So this one, hey Aaron and Johann, looking and attempting to find an answer to an issue I've stumbled on. How do you deal with a refund in QuickBooks? A supplier provided issue partial refund, and QuickBooks auto selects the difference and will push up correctly, and hence my concern. When looking through categories of classification, I can see a refund category and unsure how to deal with this transaction. No rush, but it'd be great to get your advice and help as you can provide. Jan, do you want to bring this one? Do you want me to take that one?
So no, I mean, normally when we see a refund come in, so we deal with smaller businesses, so we don't normally see credit notes. We see money deposited into a bank account as a refund, and that would just go to wherever we posted the original cost. So if it was, I was meant to be in London this week, I've had to cancel it due to train strikes, so I've got my train ticket refunded to me. So that train ticket refund has gone into my travel and subsistence category, because that's where the cost came from. The idea is you get a zero effect. So wherever the money came out from, put the money back into, so you get zero at the end, is my simplified version of it.
Love it. Love it. I think the other thing just to bear in mind is this is just one of those areas where QuickBooks isn't fantastic at dealing with refunds and putting the money in there. You do have to use what I would class as workarounds to achieve the end result. The workarounds aren't majorly complicated, but they're not as simple as, oh, there's a shiny button that says refund, let's click that and we're off to the races. So unfortunately, yeah, it is all about looking into how to post against your trade debtors or trade creditors account and posting a payment on account against there, and then having to deal with the fact that they're going through from there. Shameless plug, but I've got videos based on that exact content. Also, if you do the QuickBooks core certification, and especially the advanced certification, we give you all the details you need on how to do those workarounds there. It was one of those ones that we had to make sure from day one was in there, because it's not obvious. It's not just a shiny button. So yeah, use the workarounds, post to the debtors or creditors of your choice. No VAT if you are VAT registered, and you'll be able to make sure that you can allocate that refund accordingly. But yeah, it's a little bit unfortunate that it is a bit of a workaround to get that done. And then final question for today. What's your current Netflix, Amazon, Apple TV recommendation? Johann, your chance to go first.
So currently the wife and I are binge watching our way through The Crown again, because the new Crown season starts on Wednesday. So we're very excited for that. On a personal level, I'm one of those people, I don't like the radio when I'm working. I tend to have Netflix on because I like something in the background that I can tune in and out of. And music's just not my thing. So I'm currently watching the new season of Young Sheldon on Netflix in my working time.
Awesome. My recommendation is pretty much anything on Apple at the moment. I think they've absolutely smashed it. Some absolute brilliant ones out there. A program called Ted Lasso, which is all about an American football coach who comes to the UK and runs a Premier League football team, and that's absolutely brilliant. You'd imagine it would be terrible if you don't really like football or anything, but I promise you, it's absolutely a great show. There's another one that's called Try In, which is all about a young couple in the London looking to get themselves a family, and that one just on every level just hits home. It's absolutely brilliant. There's one called Servant or something like that, Shyamalan program, again absolutely brilliant. Literally everything on Apple TV has been an absolute hit, so highly recommend going down that route. I was dubious myself, even being an Apple fanboy, that why they're going into TV stuff, but actually they've obviously got the money to fund some really good projects, and yeah, they're showing it's good quality, and it's definitely something to look forward to. And then for me, the other recommendation I say we're going through that we don't know why we even started, but we're binge watching Parks and Recreation. Which I completely missed the first time around, but yeah, that's been great, kind of going through and putting through there, and some of the accountant jokes in there, because one of the main characters is an accountant and he gets some things, is quite funny to watch, and also the fact that they keep getting references to QuickBooks, and how boring QuickBooks is, which I find absolutely hilarious. So I'm going to take some cuts myself and make some content out of that going forward. So with that then, thank you very much for your questions and everything else. Hopefully everyone has been able to ask the questions that they need. Remember, use the live chat to talk about. Again, thanks Chaz for the super sticker. That's absolutely brilliant. We will be looking to put that into some great content going forward. We have our very first booked in Ask the Accountant. We Have Cool Friends. So more on how that's going to work at a later date, but we're really excited about that one, aren't we, Aaron?
Definitely. I don't think anyone would guess who the guest is either. It's a bit of a sideways.
I mean, I put the brief there. It's like, has to be someone about QuickBooks, so we get that QuickBooks sponsorship going through. We whole list of them that I gave to you, and I'm really confident that you've gone out there and been able to tick all those boxes. So I'm looking forward to that, making sure that we've got that exact person in that that's exactly what we wanted. So no, really, really excited to that, and we've got some cool content around that coming your way, so keep your ears peeled for that one. With that then, that is the end of the show. So it's a slightly shorter one than normal, but some of us have got to go and go to see the dentist, so at least it shows that we've got real life going on. That's a wrap. Don't forget, we're live each and every 8:30 on a Monday, and the links are already in the chat to be able to submit your questions if you need to. Don't forget, our podcast goes live on a Wednesday as well. So if you did miss some of it, why not go back to the podcast? Leave us a like, leave us some review on there. It really does help. Johann, anything you want to promote, push, anything else?
I am at Modular's Accounting Innovation Day tomorrow in Edinburgh. So I look forward to hopefully seeing people there. That's just a morning in Edinburgh, listening to various speakers and doing a few bits. And then, no, that's it for the rest of this week. I was meant to be at QuickBooks head office for the week, but train strikes and tube strikes have meant we've just called that one off.
Gutted, because I'm there. I was going to see you there. So yeah, absolutely gutted that's not happening. But yeah, it's the right call by the sound of it, even though the train strikes now are there, but there's still tube strikes, so we're still gonna have a nightmare. So whatever happens. And for everyone asking in the questions, I'll just do a quick add to stream. There is there's the wonderful cactus just sitting there chilling. Seems to be a little bit more healthy than it was when we started, so that's good to see. Keeping it going. So yeah, all good. Awesome. All right. And for me, we've got some great content coming out, even if I do say so myself. Really looking forward to bringing that content out. So it's a goodbye from me.
That's a goodbye from me.
Cheers, everyone. Thank you for a great show, and we'll see you next week. Bye for now.
Bye-bye.